So before us learning about technical analysis, there are some major things that we need to first know about. First of all, candlestick patterns. So for us to be able to study the price movements or past historical data, we need to know candlesticks. So guys, today I'm first going to teach you what candlesticks are. So let me share my screen for the candlesticks, and then let me share my screen for the candlesticks so we get started. If you're just joining, make sure to like this video. If you're just joining, make sure to like this video. Yeah, basics of candlesticks. Let's go. So guys, these are what we call candlesticks. So most of you, guys, when me I joined forex, I started with the IQ options. I don't know if you guys know IQ options. I started with learning IQ options. So IQ options, you're just literally trading candles. One candle is closed. I had time to read candles. Like I had like really hard time reading candles. You know. That's why now I had to learn candlesticks. So I literally know each candle on my fingertip. Guys, if you're forex trader, you shouldn't cram. You know, forex, we learn forex through even experience. Like the more time you spend in forex, the more like you get to know about these things on your fingertips. So what are candlesticks? Candlesticks are just, first of all, we have three types of, we have the line chart, bar chart, and then the candlestick. So the reason why we love the candlesticks is because they tell us something, they have a story to tell. So like this. So these are first candles, as you can see. As you can see, this is the green candle, and then we have the red candle. So the green candle is the one you call bullish. Oh, this is the buying candle. This green one is called bullish, or what you call a buying candle. Then the red one is called a bearish, or a bear candle. So whenever you see candles in the market, red candles, you know that is the sellers going down. But when you see, guys, the green candles, okay, those are buyers in the market. So I want you to understand, guys. Make sure to have your notebooks as we started this candlestick. So whenever you see the green candle opens from down here and it closes from up because it's going up. So this is our green candle, our bull candle, or our bullish candle. It has very many names. So whenever a green candle opens, it opens from down and closes from up. And then its high is up and then its low is up. Same to this one, its high is up and then its low is down, as you can see. Then the red candle opens from up and it closes from down. Since it's going down, it can't open from this side. But again, guys, not just because the candle has opened from up. Let's say this green candle. Not just because the candle has opened from here, it's automatically going to close from here. No, it can even go down and close as a red candle. Yeah, but again, just for you to know the basics, this is where the candlesticks open from the bullish and the bearish. My screen is a bit dim. Let me see. Let me check it out. Here. So guys, those are our basics of the candlesticks. Like that's how the candle opens and how it closes. Let me see how I can improve this. So guys, first comment if my screen is clear now. Tell me if you see everything clearly. Tell me if you see everything clearly. Guys, is my screen clear? So this is, this is the bullish candle, this is the bearish candle, guys. I hope you have understood that. Then when we jump on to the next thing, so we have now the candlestick has like the body. This is the body and this is the wick. These sticks you see, these are the wicks and this is the body. As you can see there, this is the body, this is the wick. Guys, if my resolution is quite low, uh yeah, you can just increase the quality. On there's a setting where you increase the quality. So guys, as I'm continuing, so the body has two components. It has the body and the wick. This is the body, this is the wick. Then when you jump to this, so candlesticks have different sizes. They have different sizes, as you can see. This is our, remember the green ones represent bullish and the red one represent bearish. So we have candlesticks that have body sizes. As you can see, we have a small bodied candle and a big bodied candle. So whenever you see a small bodied candle in the market, it means this represents that the buyers have less momentum now. Or let's say you can call this less buying pressure. Whenever you see this candle here, the small one, it represents less buying pressure. So meaning when you go into your trading view and then you're trying to get into a trade and then you see small bodied candles there, no, buyers now have less momentum depending on what is the structure of your market. Know that the momentum for buyers are less. And then for this big green one, it represents more buying pressure or more momentum. It means buyers are there in the market. So if you see this candle coming up, you can expect price to be still going up for the buyers. Then the small one, the small red one represents less selling pressure. This small one represents less selling pressure. So a small selling pressure candle represents less buyers in the, I mean less sellers in the market. It means sellers are not there in the market, or sellers, people no longer want to sell, because remember, a bigger the thing, it represents that thing. So the big green red candle represents more selling pressure or more momentum from the sellers. So meaning when this candle comes up, sellers are definitely going to come in the market with momentum. Even when we come to our live chart here, let me share my chart here so that you can see it. So even just on my tab here, you are going to see the same thing. So this is my trading view, as you can see. As you can see, this is my trading view. As you can see, so you can even see where the small bodied candles are. You see these small bodied candles, they represent less selling pressure, less buying pressure. Wherever you see small bodied candles, you see they represent less buying pressure, less selling pressure, meaning the other guys will come into the market. Meaning the other guys will come into the market. If the market has been selling, it will definitely go for buying. If market has been buying, it will definitely go for selling. It will definitely go for selling, guys. So I want you to, before you take any trade, guys, always make sure to wait for a candle to close. Don't just jump into any candle. So apart from there, we have these candles that have long upper shadows and short lower shadows, as you can see right here. So this is our first candle. You can see this is our first candle. This one's our first candle. This red one. So this red candle represents that the buyers tried bidding prices higher. They tried taking price higher, but for some reason, sellers came in and dropped the prices back down to close as a red candle. This one, you see this one? Guys, whenever you see a wick up like this, you know, okay, it's the buyers that tried taking price up. So meaning this candle first went up. That's why, guys, we always tell you never take a trade when that candle, let's say if you're on 1 hour candle, before it closing, never take a trade just there. Because you may, let's say, guys, if you take a trade from up here, you see where I'm putting my console. So meaning if you take a trade from here and then this market pulls back, it's going to leave you in a huge loss there. And then it closes like this. And this represents sellers have taken price back down. You see, it's the buyers that tried taking price up, but for some reason sellers came in and drove the prices back down to close as a red candle like this. So meaning when you see such a candle come in like this, price is going to definitely go down. This candle here that has a long upper shadow and a short lower shadow. You can see even where the body is pulled to. The body is pulled down. Who pulls the body down? It's the sellers, guys. It's the sellers that pull the body down. So, guys, if you're just joining, make sure to like this video. Then a candlestick that has a long lower shadow. This is a long lower shadow. You see, a candlestick that has a long lower shadow and a short upper shadow represents that sellers tried taking price down or tried bidding prices lower, but for some reason buyers came in and drove the prices back up because there's a green candle like this. You can see. So when this happens, it means buyers are. But this may let's say if price has been in a downtrend, it will reverse and go to uptrend. Then this red one, if price has been in an uptrend, it will reverse and go to a downtrend. And then these two candles, guys, you know, they represent just the same thing as the hammer, the shooting star. They represent like thing like the gravestone doji, the dragonfly doji, all these candles, because you can even see what the body is pulled like too. Then from here we go on to our next candles. Guys, these are called spinning tops. By the way, guys, watch this video from the start to the end, because when I'm done with these candlesticks, I'm going to show you on Trading View how you can find these candles. There's an indicator that helps you identify these candles, and you can backtest them and you see where all these candles appear to. So stay on, guys. Stay on. Watch the entire video. So guys, I'm back here. So now this is our pair of candles. These are called spinning tops. So whenever you find spinning tops in the market, spinning tops just represent one thing: indecision. You can see the close and open, they're almost next to each other. Same to the bearish candle, as you can see here. So whenever you see this candle, you know that, okay, it represents indecision. Indecision. The buyers and sellers were, let's say buyers and sellers were fighting, but the fight was a standoff, so no one took the upper hand. So price closed as at equal. So there's indecision in the market. So buyers and sellers, everyone is like, should we continue buying or should we continue selling? So they're just undecisive. So in most cases, if you're in an uptrend, this candle may represent a reversal if you have been on an extreme uptrend. But again, if you're, let's say if a price has just been going into an uptrend, and then this spinning top appears, depending on what structure you have, this can also represent a continuation. So same to this red candle. If it's on an extreme uptrend, the price may reverse to go to the downside. And this green candle, if it's on an extreme downtrend, prices may reverse and go to the upper side. So just know these represent indecision in the market. And also, guys, these don't just represent indecision. These spinning tops. Spinning tops are very, very good candles, because the way you see a rising wedge and a falling wedge, and a rising wedge, they also represent the same thing: indecision or continuation or reversal. You get, guys? So even these candlesticks, they represent indecision or continuation or reversal. So that's why it's always good to know these candlesticks on your fingertips, because when you see a candlestick this appear onto your forex chart, you know, okay, price is going to continue and go that way, or it's going to reverse. So as the way we have reversal and continuational patterns in forex, the same way even these candles, they're literally the same thing. Even in indicators, we have indicators that show continuation, and we have indicators that will show price is going to reverse. So guys, this is why it's always good to know all these things on your fingertips when you're learning forex. So guys, let's continue. If you're just joining in, guys, make sure to like this video. And check my bio below this video and see a link to my Telegram. If you're not into my Telegram, and also if you want to get funded, check there's a link in my bio. So guys, these are called spinning tops. They're called indecision candles. Price will go up or will come down. Any of those two candles. Then we have the Marubozu candlesticks. These are called Marubozu candles. So Marubozu candles, they just represent total selling pressure and total buying pressure. These two guys, I hope you're writing somewhere. They represent total buying pressure, total selling pressure. So these candlesticks, mostly they appear when, you know, we have had news, when you have high volatility news in the market. Let's say like NFP, these candles may appear to show that, okay, buyers are too much in the market, or sellers are too much in the market. These two candlesticks, they're called Marubozu candlesticks, and most times they don't have a wick, or sometimes they just have a short wick on them. Or like totally no wick. So when this appears, you know, okay, total sellers are too many in the market, so price can even continue to go down, or it may reverse and come down. Let's say if this red candle appears on a market that has been in a green, let's say price has been going in a bull run. So if this candle appears when price has been going in the bull run, another green candle may appear just to recover back the market, so that it keeps on going back to the bull run. Same to this green one. If this green one appears when price has been in a downtrend, another red candle has to appear to take back the market, so that price reverses, continues going down. So these candles, they have like really many importance. They don't just represent total buying pressure, total selling pressure. But these are called Marubozu candles. Again, when you find this red one on a downtrend, it means price is like the sellers have momentum, so price will continue going down. But if it's this green one, the green Marubozu, it means if you find it on an uptrend, it means price is continuing to go up. So it means there's momentum for the buyers, depending on whatever structure you are on. But again, guys, these just represent total buying pressure, total selling pressure. Then from here we have the engulfing candle. So guys, this is one of the most important reversal candle pattern that we have in forex. This is one of the most important candle pattern that we have in forex, guys. This is called a bearish engulfing bar. So a bearish engulfing bar is just a reversal pattern to the downside. This is a reversal candle. This is a reversal candle. So guys, these other candles that these next candles that I'm going to be telling you now, I want you to listen to my words, whatever I'm saying. Whenever you're trading a bearish engulfing candle, we want to find it on an uptrend, on an extreme uptrend, and price is going to reverse and come down. So a bearish engulfing bar candle, it consists of a small green candle, a bullish candle, then a big red candle. So remember, we said a small bodied green candle represents less buying pressure. Then when this candle appears in, it represents more selling pressure. So when you combine these two, they form a pattern that we call a bearish engulfing bar pattern, and this is a reversal pattern to the downside. So it happens on an uptrend. As you can see, this is my uptrend market. As you can see, this is my uptrend market. You can see prices in an uptrend. So as I told you guys, me, I like to catch reversals in the market. I don't want to just trade anyhow. I don't want to identify this pattern in between middle here. You see, I want to always identify this pattern on an extreme uptrend so that I can drive the price down. As the saying says, sell high, buy low. So I want always sell high. So this is where you see our pattern appears. So when this pattern appears, you can always take trade on this next candle after this pattern appears. Bearish, because remember, this pattern alone, it represents it's a reversal pattern to the downside. It means now sellers have momentum. There are no more buyers left in the market. So you take trade on this next candle, and then you put your stop loss just above here. You put your stop loss just above here, so that price doesn't take you out. And then you can measure your take profit on depending on the target that you want, or you can always measure a strong level, like you see this strong level, this order block here. So again, this is called a bearish engulfing candle. I'm too speedy. Okay, let me reduce my speed. I'm sorry. Let me take it slow. So guys, this is called a bearish engulfing candle. We always find it on the top of the market, or let's say on an extreme uptrend when price is about to reverse. So this is what you look for in an uptrend. One of the patterns called a bearish engulfing candle. So from here we have the opposite. The opposite is called a bullish engulfing candle, guys. This is called a bullish engulfing candle. So a bullish engulfing candle, also it's a reversal pattern, but this time around, this is a reversal pattern to the upside. You can see it. Even here we have to have had the price coming down. Then when this small candle appears, remember we said this small candle represents less buying pressure, and the big candle represents more buying pressure. So the two candles form a pattern that we call, these two candles, they form a pattern that we call a bullish engulfing pattern. So a bullish engulfing pattern is a reversal pattern. And also, guys, I've told you that I'm going to be showing you on my trading view how you can identify all these candles. Guys, most of you have been using trading view actually the wrong way, but we're going to correct that. So where do we find the bullish engulfing candle? We find it on a downtrend. We find it on a downtrend. So this is where we find the bullish engulfing candle like this. So we must have had price coming in a downtrend like this. So as you can see, down like this. Then when this pattern appears, when we see this pattern, then we take trade on our next candles. As you can see, we take trade on our next candles here. You see the way we mark out this box here to mark out this candle. So we take trade here and then put our stop loss here. Even you can see we put our stop loss below here. Then our target is just a zone that has been strong, like this zone up here. This is a strong zone here, so I can put my take profit here. So okay, this is a bullish reversal pattern to the upside. It's a bullish reversal pattern to the upside. It's made of a small red candle and a big green candle. Guys, if you're just joining, make sure to like this video. So this is called the bullish engulfing candle. From here, we have what we call the Doji candle. Now, this is one of my favorite candles, the Doji. So, guys, remember I told you some of these candles just represent literally the same thing. Some of these candles just represent literally the same thing. So a Doji candle is just like a plus. Most of you know it as a plus. So a Doji candle just represents indecision. It represents indecision in the market. Buyers and sellers are indecisive. So when you see this doji coming into the market, it may represent a continuation to the upside or a reversal, depending on what market structure you are on. Depending on what market structure that you are on. So this is called a doji candle. So, and then why do you want to find the doji? We also like to find the doji when price has been coming in an uptrend or a downtrend, so that we can have a reversal. Mostly me, I use my doji. I use the doji candle for a reversal, so that I can take trade from it to a reversal. And again, guys, I want you to note this. Most times you don't just receive the doji only. Sometimes you get another candle confirmation that price is going to go down. So sometimes you may get hope from these other candles, but this is called a doji candle, and it always forms at on an extreme uptrend. Like it can form anywhere actually, but for me to take my trades, I want to see it on an extreme uptrend or an extreme downtrend, guys. So that's called the doji. Then the next one is called a dragonfly doji. A dragonfly doji. This is the dragonfly doji. It's like a capital T. It's like a capital T. You can see it. It's like a capital T. This one, a dragonfly doji. So dragonfly doji, as I told you, some of these candles just represent the same thing as the candles that I told you at first. The candles that I showed you at first. Let's first go back and show you. You see where the body is pulled to. The closing price and opening price for this for the dragonfly doji is the same. So guys, if you remember, I told you some of these candles just represent the same thing. So these were the candles that I showed you. See. So the dragonfly doji is just like this green candle. You see where the body is pulled to? The body is pulled up. So let's go back now down to that dragonfly doji. So this is our dragonfly doji, guys, as you can see. It represents just, it's a reversal candle to the upper side. It's a reversal candle to the upper side. How is it a reversal candle to the upper side? Sellers try taking price down, but for some reason sellers came in and dropped the prices back up. So that the closing price and opening price are equal, like they are at the same level. The closing price and opening price for the dragonfly doji are at the same level. So as you can see, this is our dragonfly doji. And guys, remember I told you, note my words. These candles, you want to identify them on an extreme uptrend or an extreme downtrend. As you can see this picture here, this is an extreme downtrend, and then our dragonfly doji appears here. Then, as I told you, this is a reversal candle to the upper side. You can see. So meaning this candle, it didn't just open like this. It means it was like even this big candle, you see. Because remember, this week is formed when price goes down there, but for some reason it pulls back. It pulls back and closes from up here to form like this. Okay, so I told you guys, don't take trades just anyhow, just because you have seen a big candle like this is still going down. No, don't do that. Be patient until this candle closes, because when the candle closes, it will tell you what is in the market. It will tell you, okay, now buyers have momentum. Buyers are trying to come into the market. That's what it will be telling you guys. So this is our dragonfly doji. This is our dragonfly doji, guys. Dragonfly doji, and we always want to find it on a downtrend. Then the opposite of the dragonfly doji, we have the gravestone doji. So this is let's say this is an inverted T. This is an inverted T. But look where the body is and the wick. Why is the wick long? The wick is long because buyers tried taking the price up. Buyers tried taking the price up. But for some reason, sellers came in and dropped the price back down to close as this. So the closing price and opening price for this is equal. Even the closing price and opening price and the low are equal, like at the same level here. So where do we want to identify this? We want to identify this gravestone doji on an uptrend. So that price reverses and goes to the downside. You understand me, guys? So this is where it appears, you see. We must have had price going in an uptrend like this, and then it appears up there. So meaning this gravestone was also a bullish candle when before its time passed out. Remember, actually, I forgot to tell you, all these candles represent a time frame. So whatever time frame you're on, these candles represent that time frame. So if you're on 1 hour time frame, each of these candles represent 1 hour. If you're on a 15 minutes time frame, each of these candles represent 15 minutes, like 15 minutes, 15 minutes, 15 minutes. So we have time frames from literally the, I don't know, is it microseconds? We have time from I think microseconds, 1 second, then we have 1 minute, even 2 minutes, depending on how you're using your trading view. We have up to, I don't know, even years. So when each candle is representing 1 year, 1 year, 1 year, 1 month, 1 month, 1 month. So let's say if this is 1 hour, in 1 hour time frame I'm on. So meaning this is 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. So for me to take the trade here, I would wait for this candle to close. Because I told you if I buy from here, let's say candle had gone up, it's a big green candle, it had gone up here, and then I take a trade from here, they're going to catch me from there. This candle will pull back and then close like this, and then this will be just be an indication that buyers have been rejected in the market. You can see this long upper wick, it represents rejection, or sellers have took back the market down, even though buyers tried, bidding prices higher. Then when this candle closes fully, then see price falls. You see price falls and comes down depending on whatever structure you're on. You can always take trade on this next candle, or let's say when you marked out your zone here, or let's say when you had marked out a box here, you can take trade on here. Then you put your stop loss anywhere you want. But if you take trade up here, you can just put your stop loss above here. And in most cases, guys, price respects these candles. Even though there is manipulation in the market, but there are sometimes where price respects these candles. Guys, if you have just joined in, make sure to like this video, share with all your friends. Yeah, we are doing technical analysis today, but before we do the charts, we're first learning about the candlesticks. So the next candle, we have now a pattern. So our first pattern was the bullish engulfing candle and bearish engulfing candle. So this is our next pattern. This is called a morning star. This is called a morning star pattern. So a morning star pattern is a reversal pattern to the upper side. How does it form? So we need to have an extreme, we need to have a downtrend market like this, you see? We need to have a downtrend market. Guys, note, I'm only finding these candles on an uptrend and a downtrend only. I'm not finding these candles in the middle here, no. I like to ride this whole thing from down to up and then ride it from up to down. So this is our morning star pattern. So a morning star pattern, it consists of a big red candle. Then this small green one here, it can be bullish or bearish. But this small one represents indecision in the market. So the next candle will tell us what the price is going or headed to. So when this big candle appears in the market, now it represents, okay, that buyers have momentum. It represents that buyers have momentum in the market. Then you will see price going up. But again, this is also a very good pattern when you are trading in the forex market. And as I told you also, I'm going to be showing you how we can find all these candles on our trading view. I told you I'm going to be showing you how we can find all these candles on our trading view, guys. I'm going to be showing you. If you just join in, make sure to like this video. Make sure to like this video. Make sure to like this video. So this is a morning star pattern. So if you're someone who trades price action, these are candles, you need them. You need them on your fingertips. So a morning star pattern it consists of 3 candles. You need to have this candle, this big red candle, then a small one which can be bullish or bearish. Then this green one, it has to open and then it has to close above this one. And sometimes at least above this one, this red one. Then to form our pattern. You get, guys? Again, you can even see here, before these candles, we had a doji here. Doji, we say it presents reversal or indecision in the market. So you can even see, as I told you, you can have a combination of 2 or more candles that will tell you, okay, price is going that way. As you can see, price reverses and goes up. But this is a morning star pattern. The next pattern is called a evening star candle pattern. This is called evening star candle pattern. Yeah, no problem, guys. I'm going to share this information in the Telegram. I'm going to share all this PDF in the Telegram so that you can go and learn more about it. Actually, I'm going to share with you the Candlestick Bible, because the Candlestick Bible, it has like full explanation. The way I'm explaining this is the way, you know, just when you just be looking at the pictures, you know, you can even just watch this video as many times as one, so that you can learn these things. Me, guys, I learn for it by watching YouTube every single day. The reason why I'm doing these things, the reason why I'm doing these lives is just because, man, I know there are a lot of struggling traders that I was like them, and they didn't like really have access to this. So this is our evening star pattern. So the evening star pattern is a reversal candle. It's a reversal candle pattern to the downside. So this is the opposite of the morning star. So this one consists of a big bullish candle. This bullish candle represents more buying pressure. Then this small one represents less selling pressure. So when this candle, this one, we said it can be bullish or bearish. So this one represents mostly indecision. So this other third candle is one that tells us, okay, price is going to go that way. As you can see, this is our chart here. We have price coming in an uptrend, then our pattern appears, you see. The red one, as I told you, it has to be bigger than this and this, you see. So meaning, this is our reversal pattern to the downside. But remember, we want to find this on an uptrend, as you can see here. So that we can put our entry, we can take entry just here and then put our stop loss just above there. Then our target, it can be at a certain measures level. So this is called an evening star pattern. You can even hear the words, guys. Evening star, morning star. Michael, you can just check the link there. In all my videos, there are links to my telegrams. So guys, as you can hear the words morning star, evening star. Morning means price is going to go up, morning. Evening star meaning price is going to go down, evening star. But again, guys, don't worry. I'm going to show you a simple way how you can find all these candles in your trading view. I hope you all have trading view. So now this is what we call, this is my second favorite candle. It's called the hammer, or the one you call pin bar. But remember, guys, I told you some of these candles just represent the same thing. Look at the opening. Look at the opening and closing of this candle. It's the same. You see, the closing price is up here, the opening is almost like equal. You see, then we have a long lower shadow. What did we say about a candlestick that looks like this? Sellers tried taking prices down, but for some reason, buyers came in and drove the prices back up to close as a green candle like this, or to close as a hammer. So meaning when candle pulls back, it pulls, it goes up, it closes above there. But this indicates rejection. The sellers have been rejected in the market. So meaning this is a possible indication for a reversal to the upper side. That's why I told you don't take trade here until this candle closes. When this 1 hour candle closes, you can take trade on the next candle. But when you take here, when you sell from here, they'll catch you from here. You see, they will catch you, and then price will pull back and go back to buying. So this is called a pin bar. And then, guys, I'm going to be doing a video on how you can use a pin bar as a strategy. This is one of the most important and favorite candles to use as a strategy. This is one of the best ones. So where do we find the hammer? The hammer will just find it down on a downtrend, as you can see. We find it on a downtrend, you see. We must have had price coming in a downtrend like this, you see. Then this happened. So meaning given this candle was just like this candle, these candles, you see. It was a red candle, but for some reason it came back and closed from above here. So meaning this is, we may have a reversal to the upper side. So that's why we have a small bodied, then a long lower shadow. So this just represents, okay, sellers, and there are no more sellers left in the market. Then we have, you see, this nice uptrend. You can even see now price goes up, it retraces, it goes up. You see, this is a nice thing. You see, very nice. You can even see this candle here. This one, you can see this one. The body was pulled down. That's why price came down like this. You see. So guys, you should understand all these candlesticks on your fingertips. You need to know all these candles on your fingertips. But this is called the pin bar, and I'm going to be doing a strategy. I think this week, I'm going to be doing a strategy on how we can use the pin bar as a strategy to take trades. Then the opposite of the pin bar is called a shooting star. No, it's called a shooting star. So shooting star is a reversal candle to the downside. It's a reversal candle to the downside, or you can call this a bearish pain bar. So for this one, you can just see where is the who tried taking the body up? It's the sellers. I mean, the buyers tried taking price up, you see, but for some reason they bought the price back down like this. You see, who bought the back down the price? Of course, the sellers bought the price back down to close as this. So when price, rejects all this, yeah, when price rejects all this, what do you think? It's the sellers that have brought back the market down. And the reason, guys, the reason why we tell you guys to trade on big time frames is because when you see these candles on smaller time frames, there's too much noise on smaller time frames. You know, it's only retail traders that trade on small time frames. Big, the banks and retail traders and then the brokers, they trade on big time frames only. So when you see these candles on big time frames, they can be valid. But again, we use smaller candles for our entries. I mean, we use small time frames for our entries. But again, it's always better to find these candles on bigger time frames. Then you can go and search in the small time frames. Then you can find your entry. Guys. If you're just joining in, make sure to like this video. Make sure to share it with all your friends. Let people join in. So this is our shooting star. Where does the shooting star happen? On an uptrend, just like this. You see, we must have had price coming in an uptrend like this. You see, then when it appears, as I told you, this was not just like this. It first went up as a green candle, but for some reason, sellers had momentum and dropped the prices back down to close like this. So meaning, if I'm to take a trade here, I can just take my trade below here, or I wait for this candle to be like, when this next candle, it will want to first go back up a little bit, then come back. So me, most times I take my trades on this next candle and then put my stop loss just above here. So that I don't take, I'm not taken out. And the reason why I'm criticizing, I'm talking more about the stop loss is because the stop loss is a must. A stop loss is a must. A stop loss it helps us to not make any losses in the markets or to blow up in the market. We don't blow accounts if we use stop losses. The reason why most of you blow accounts is because you don't choose a stop loss or you put your stop loss very far. You get. So guys, these have been our candlesticks. Those have been our candlesticks. We have more candlesticks. We have like the inverted hammer. We have the inverted hammer, we have the hanging man, we have the haramic candles, we have the three soldiers. We have very many candles, but these are like my most major candles. My most major candles, guys. So from here, now as I told you, I'm going to be showing you on TradingView how we find all these candlesticks. I hope you're going to note this down, guys. I hope you don't forget on how you can find these candles on your TradingView. Are you ready? Let's go, guys. So I'm going to let me share my trading view so that you can see it. Yeah, that person you see there, that's what he's called Basil Junior. Okay, let me share my screen. Just a minute. Okay, guys, so this is my trading view, as you can see. This is my trading view. So most of you guys, when you come onto this chart, when you come onto your trading view, let's say if you're a beginner trader, so let's say I'm a beginner trader also. So this is how I would be trading. But even before we go further, guys, look at this. Look at this. This is what we see. I've been telling you guys. These things are all. When you see these things, just take the trade. You see this here. You see this here. This is a bearish engulfing candle. I don't know if you see it, guys. That's a bearish engulfing candle. Let me try to zoom in. This one. You see this one? It's a bullish, a bearish engulfing candle. You can see, as I told you, we must have had like an uptrend. So this is like a small uptrend, which is a retracement. But again, when this appears, you see price pushes down. You see. Now look at the candle down here. Look at this black candle right here. Oh my goodness. Forex is very simple. Forex is very simple, guys. As long as we don't complicate it. So let me zoom in here. You can see. Look at this candle, guys. You see this candle? This is, you see, this candle was guys, I'm sorry, these candles are in black and blue. I love to see my candles like this. Yeah, even guys, tweezer bottoms and then the tops they're all major candles, but I didn't just include them because me, I don't trade them. But tweezers, they also represent reversals. The tweezer tops and bottoms, they also represent reversals. So let me go back to my trading view. So as you can see, this is my trading view. Let me reset this. As you can see, guys, as I told you, we want to find these candles on uptrends and downtrends. So you see what candle we have here? You see this candle, what we have here? You see this hammer? The body is pulled up to close like this. Then what do we have next? An uptrend, you see? An uptrend to the upper side. So meaning if I taken this trade, I would put my stop loss just here, just here. You see, guys, just here. I would put my stop loss just here. Or you can even see price respected this. You see, guys. So, guys, how do you find these candles? The easiest way to find these candles on TradingView. Whenever you guys come here and you search for indicators, let me actually choose another currency pair that I don't have analysis on. Let me search. What pair, guys, do you want me to search for? Let's do silver. Let's do silver. But no, since this is forex, let me do a currency pair like euro card. Let's do euro card. So guys, when you see this chart, this is called the naked chart. This is called a naked chart. There is no yeah, forex is simple. So this is called a naked chart, guys. There is no indicator, there's no nothing. So we need to use our naked eyes to apply some price action. Price action is just by looking at these charts and then you can know where price will go next. But based off looking at price, historical data. So what you want to do, let's go to the small 1 hour time frame. So guys, what we are going to be looking for is we are going to come here to these indicators and then you're going to be searching any candles that you want. So when you choose here, you see, guys, when you come here and choose technicals, then you're going to find indicators, strategies, volume profile, auto, and then candlestick patterns. You see, candlestick patterns. So when you press candlestick patterns like this, they're going to bring you all the candles, like all the candles. They're going to bring you all the candles. You see, guys, you are going to bring you all the candles you can see. These are all the candlesticks that we have in Forex, you see. So whatever candle you want, you just tap on it. So we're going to start with like a doji candle. You see, I've now pressed on this doji candle. Then when I come here, they're going to show me all the dojis. Guys, you see all those doji candles. So guys, this is how you use TradingView. You don't just use TradingView anyhowly. Yeah? So me, I use this to backtest the market. The time when I didn't know Forex, I used to use this to backtest the market. You can see a doji. We have a doji candle here. You can see a doji candle here, and then price goes up. You see here, doji candle. Let's see. You see doji candle here, doji candle here. You see, guys, most of you have been using TradingView the wrong way. Doji candle price goes up. Doji candle price goes up. You see, most of you have been using TradingView the wrong way. You see, doji. So wherever you want to find the doji, like they will show you through. As I told you, you want to find the doji on an uptrend or a downtrend. This is a downtrend and uptrend. You see, a doji right there. Even though you change your time frame, let's change our time frame to daily time frame. They're still going to show you the doji candles, as you can see. These are all doji candles. Doji. You see, it's a doji. You see, guys, those are dojis. So that is called a doji candle. Then from a doji candle, you can search another candle. We are going to search for another candle. Let's say we come back to candlesticks. We're going to say a dragonfly doji. They're going to show us all the dragonfly dojis. So let me go to my 1 hour time frame so that you can see. Guys, I hope you are seeing how I'm identifying these candles. So this is the dragonfly doji. I've already selected it, so I just need to wait for the software to help me look for these candles. The dragonfly doji. Remember the dragonfly doji, it happens on a downtrend when price is about to shoot to the upper side. Let me try to change the currency. And you see if you'll find a dragonfly doji. Let me choose another candle. Let me choose another candle. Let me choose another candle like let's say engulfing candle, and the bullish engulfing candle. So as I told you guys, Look, guys, look. Everyone, look. Everyone, look. Do you see the red ones and the blue ones? The red ones are representing bullish engulfing candles, and the blue ones are representing the red ones are representing bearish engulfing candles, and the blue ones are representing bullish engulfing candles. Remember, I told you guys the bullish engulfing candles represent reversal to the upper side. Look wherever we're finding them. Look, engulfing candle price goes up, engulfing candle price goes up, engulfing candle price goes up. You see, guys, how do you say forex is hard? Forex is only hard when you don't apply proper risk management. Look, I've just put in here indicators. I put here, you see, I just search here any candle and I just press it on it. And then this software is going to allow me, it's going to help me identify all those candles that I want, guys. It can identify all these candles on your whatever time frame you want. Whatever time frame you want, you can see. You see? Look at this. You see? I told you I want to identify these patterns on, I want to find them on a downtrend or an uptrend. So look where you see this bullish engulfing candles, you see where they are. This is a bullish engulfing candle reversal to the upper side. Then here, reversal to the downside. Guys, how would you say forex is? The only reason why forex is hard because you see, traders, when you come into this market, you don't make research. Yeah, I'm telling you guys, you see most of the richest people in the US, the billionaires. I'm talking about billionaires, not even millionaires. These billionaires, guys, these billionaires, what has made them like very rich and wealthy? It's because they research data. They're always open to learning. They're ever learning. They're ever reading books. You see, the difference between successful people and non-successful people is because successful people, they spend most of their time learning data, but non-successful people, they're always wasting time. You see. So guys, these are. Let me choose another candle. Let me choose another candle. You're going to see. You guys are. You see now when I remove the red ones, they are only leaving the bullish patterns. You can see wherever there is a bullish pattern. This is a bullish engulfing. Price at least it has reversed. Even you see this one, price at least reversed and went up. At least you can even see here, price reversed, merged and went up. You can see. You see, at least price has gone up. At least, eh? Guys, forex. I'm telling you, forex is easy. This can be used for scalping. Just need to know the meaning of candlesticks, guys. This is. I'm telling you, you don't need to use this for scalping. You don't need to just see this candle and then take a trade. Before you use these candles, you need to have like had a proper structure. You must have had a proper structure. You know, you must have had a proper structure. No, you don't just need to just use this for scalping. This is not, guys. If you want to learn forex, stop scalping. Me, I'm not here to teach you how to scalp. Scalping will get you killed, man. So, guys, let me choose another candle here. Let's choose the hammer. This is the hammer. You see, I just stop there. Then they'll bring us the hammer. Let's see if they will bring us some hammers there. Yeah. So you can see the hammer, guys. Here, there is a hammer here. You can see the H. There is a hammer here. Then you have a hammer here. You see, I told you I want to see these on a downtrend. You see, a hammer here. You can only be able to see these candlesticks if you're. Oh, guys, 10 pips with this one. Can I get at least 10 pips, bruh? I want your targets to be 100 pips and plus. I don't want you to underestimate yourself looking for these small pips. If you're using 10 pips and you're using a 0.10 lot size, that is nothing, guys. I want you to go for big pips. You can, bro. Let me show you. Let's first go back here. I show you where there's a hammer. Then you measure. You see where the hammer is. So let's say if you took this trade here, and then you see you measured your target from, let's say if you took your trade like here, see, from here. I don't know if I say. Let's say if you took your trade from around here to here. This is 45 pips, guys, and then your stop loss would be just like 10 or 15 pips. You see, guys, you don't need to worry about. The more you stay into this market, the more you're going to learn. You get the more you're going to learn about structures. And I'm going to, guys, my next part is now the market structures, the three components you have: the uptrend, downtrend, and ranging markets. Those are my next components. But for this one, we're first done candlestick. So I'm showing you now. This was the hammer. You can see the hammer. We have a hammer here. Price goes up. The hammer here. Price goes up a little bit. You see, price goes up a little bit. So me, I'm always looking for like really major downtrends. And you see, hammer here. Price goes up a little bit. You see. So that was the hammer. Let's see. I'll show you one more candle. Then we go to another one. So we have spinning tops here. Then someone talked about the tweezer bottoms and tops. I even select these ones here. The tweezers, those are reversal to the downside. The tweezers, you can even see them. The tweezers, you see, tweezers here. But again, I'm not someone who trades these tweezers. Yeah, I don't trade them because these are not candles that you're going to see every time in the market. Even this software, even itself, it has hard time looking for these tweezers. Because tweezers are supposed to be like the same, You get what I'm saying? The bodies have to be the same and the wicks have to be the same. Do you understand me, guys? That's why I don't trade the tweezers. So, guys, this is my trading view, and that's how you can find these candles, and then you can back test them on your charts. You can definitely back test them on your charts. So let's jump on to now some little bit of market structures. We are now jumping onto market structure. These have been candlesticks. These have been candlesticks, guys. Do you want me to continue with market structure? Guys, comment below if you want me to continue with market structure. Definitely, man. I came now. I have energy, you know. Let's go to market structures now. Let me share my screen. Let me share my screen so that you can see. A market structure. So, guys, you can see my screen. We are now on to market structure. Market structure has three components. Market structure has three components. So, market structure has three components. So, as we are saying about technical analysis is all market structure. So, technical analysis is the framework in which traders study price movement. So, the idea is that a person can look at historical price movements and based off the price action can determine at some level where price will go next. So, this is technical analysis. So, now let's go into the market structure. Market structure has three, as I told you, it has the uptrend, downtrend, and sideways markets. It has the uptrend, downtrend, and sideways markets. It has the uptrend, downtrend, and sideways market. So an uptrend is a market that goes up. You know, price can never go like straight up. It can never go straight up. So as you can see, this is the uptrend market. So when a market is going in an uptrend, it has to form swing lows and swing highs, or what you call a high low, guys. Listen, a high low and a high low, higher high. Do you understand? So this is how an uptrend market forms. It has to form a high low and a higher high. You understand me? High low, high low. This is how price goes in an uptrend. This is how price goes in an uptrend. It doesn't go straight. No. You see, price has to go up here, find resistance. Price has to go up here. Price has to go. So let's say this was like a major zone. So price bounced off from here. You see, we had rejection here and then here. Price goes up here, finds resistance, then it comes out, finds support. You see. So there are very many ways how we can trade this market. So the first way is just by knowing how price moves. So whenever you see price has gone up and then it has formed this, know that this is a resistance level. Know that this is a resistance level, or you know that that's a higher high. So price is just going to come down here to retrace, but it's going to retrace just a small portion of this previous big move. So in that way, it's going to find its support here and then go back up and break this this the previous resistance to now this one will now become a support level. But again, price is just, you know, resistance, support, resistance, support, resistance, support. So this is how price goes up in an uptrend, guys. And I'm going to show you this on a live market. I'm going to be showing you this on a live market. Let me show you. Let me share my other screen so that you can see. Let me share my screen on TradingView. So I'm going to show you one of the pairs that I traded. I think it was last month. So we are going to choose another currency. Let's see. This is Nasdaq. Nasdaq. So this is my Nasdaq, as you can see, guys. I'm going to go to the 4-hour time frame. As you can see, this is the 4-hour time frame. You can see. Let me remove this. So, guys, do you see what let me even first remove these channels. You see? Let me remove these channels so that you can see clearly. Do you see this uptrend market? Do you see what I'm meaning? What I'm trying to mean, when the price is going up, it can never go in a straight line. It has to find resistance and then support, you know? You see? So now, you see, price found resistance here. You see at this level here, then it comes down here to find support. It comes here again, finds another resistance. Just because this zone, it's a strong zone. You see, there's one, you see, rejection, rejection, and then here, rejection. Then here, price comes, but again, here, it doesn't really go down. Since we had this big impulsive move to the upper side, you see this impulsive move to the upper side. So meaning this price had to just retrace, just a short move of the previous impulsive move. It had to retrace just a thanks, man. Thanks, man. Thanks, man. So, trading view. so guys, I'm going to repeat. Let me choose this. I think this would be a good trading. So, guys, you look here. We have this. You see this big move? We have that big move. You see? We have this move down here. You see, price goes up like this. Then again, it comes down. But again, here it's only retracing a small portion of this. You see this? So when we are on an uptrend, we are only looking for buys, only for buys. We can also sell, but again, since price is going in an uptrend, it's going to give us long impulsive move. You see, from here to up here, this is a very long impulsive move. But when you try to sell, price you're going to sell, and price will just come here to here. It's a short move, guys. I hope you're understanding me. So you can see, so when price breaks now this zone here, you see, guys, when price breaks this zone, you see, it rejects here, it comes here again here. When it breaks, it goes up. So now this red line, you see this, guys, this red line, it has now become my support. So when price goes up like this, now this is what we call an impulsive move. You see this impulsive move, guys. I want you to understand these terms. I want you to be able to understand these terms. This is called an impulsive move. Then this is a retracement. This is a retracement. You see? So, as I told you, we are only looking for buys on an uptrend. So, we buy here. You see here, this is where we buy, guys. The reason why we are buying here is because even when we use a Fibonacci retracement, we measure. If Fibonacci retracement, it's going to tell us how far, like it tells you how far price is going to retrace on this big move. And then the reason why we are buying here is because this is a strong zone here. So meaning whenever you have a breakout, price has to at least come back and it retests. Price has to come back and retests. Do you understand me, guys? Price has to come back and retrace and not retrace. Okay, you can. This is also a retracement, but also it's a retest. Since price has just broken this line here, this now becomes a retest. So price comes here to try and see if it can come back here, but it fails now. It just bounces off and goes back up to give us now this nice. You see this nice long move. You see. So now this is now our support. Now price, you see, price finds another resistance here. You see now price resistance support. You see. So now again, price goes up. You see, up to up here. You see. Now again, it retraces. You see. So we shall just draw out that. You can see now this was our new. You see, that's another resistance line here. You see, this black one, this one. Then price comes again. It retraces. You see, price comes down and retraces. Remember, I told you price can never go in a straight line. Price can never go in a straight line. It can never go in a straight line. So again, as I told you, we wait for a retracement to happen and then we take another trade. But remember, I told you only take buys. You're only taking buys. So most of you have heard me about talking about area 12s and all that. So we have in area 12 we have what we call impulsive moves and retracements. We have what we call impulsive moves, and then we have corrective moves. So impulsive moves are the ones that give us this nice. You see this nice impulsive retracement, impulsive retracement, impulsive. So now this is our guys. Let's name these things together. This is this one here. This is a higher high. This is a higher high. Higher high. This one here. This is a higher high, and then this one is a high low. High low. You see? This one is a high low. This one. Again, this is a higher high. So this is another higher high. You see here. Again, this is a high low. Guys, I hope we are together. I hope we are together. So this is a high low, you see. Then again, we have another higher high. This is now where price switches and then it wants to reverse. You can see this is now our highest high. You see, guys, I hope we are together. I hope we are together. You can see this is my market. So I told you, price has to give us higher highs, higher lows, higher highs, higher lows, higher highs, higher lows. So we are buying here, buying here. So one of the ways we can just use is just by trying to predict the support and resistance levels. When price breaks this becomes now our support. So price when it goes up, and then whenever we see signs of price coming back down, we wait until it reaches a certain zone where it has been already. So price was already at this red line. You can even see 1, 2, 3. So meaning price had to come back here and then retest this level before it goes back up. As you can see, so I would take my trade here and then put my stop loss just below here. Do you see this zone here? This is why I put my stop loss here. I would put my stop loss just here. I'll put my stop loss just here because this is another previous zone here. And then I would put my target. I would just look at his historical data this side and then measure my target. You understand, guys? But again, I'm going to show you another easy way how you can measure the targets. But again, price is forming higher highs, higher lows, higher highs, higher lows. Then here, when it reaches the time where it forms the higher high, this time around, price just breaks. You see, when price breaks, it goes down here. Now it gives us now this. Actually, from here, you see, it comes down and breaks any of the high lows, the previous high lows. It means now the trend or the bull run has ended. It means the bull run has ended. Now we're going to see a reversal. But remember, guys, I told you we look for candles in here. We look for candles in here that are going to show us a reversal. But again, even though you know about area 12s, you can know, okay, price is now going to reverse. But again, one of the biggest signs to see how price is going to reverse when price breaks a previous lower high. When price breaks a previous lower high. So let me show you another way how we can. So another way is by drawing channels. So what we do first is draw a trend line. What we do, we draw a trend line. As you can see, this is my trend line. This is my trend line, guys. So this is my trend line, as you can see. This is my trend line markets. So why do we draw a trend line below price? The reason why we draw a trend line below price is because whenever price is in an uptrend, we draw the trend line below. The trend line represents where price is going. So this is how you identify that price is going in an uptrend. So when you're drawing a trend line, just look for 2 points. If you can connect a point here and here, then it means this is valid. So you just connect here and here, then you drag to future. Then price is going to be, you see, price is going to be bouncing off here. So again, the other way we can buy in this market, whenever price bounces off this, you see, let me actually extend it up to the side down here. Let me extend that down here. So when do we buy in the market? Whenever price bounces off whenever price bounces off our trend line, whenever price comes here, boom, we know, okay, it's time for us to now buy. So guys, I think you can now see this is clear. Let me first remove this line here. Let me move this line here. Let me first remove this line. Not even this one. So guys, you can see whenever price comes here, you see now you can see things are making sense. That's why I'm telling you we buy on uptrends, because you can see the move from here to up here is a long move. If you have measured the number of pips between down here to up here, you can see guys, these are very many pips. You can see these are very many pips. Almost 1000, almost 1171, 76 pips, because this is Nasdaq. You can see the number of pips from here to there. There are very many. Remember, guys, this is a 4-hour time frame. This is a 4-hour time frame. So we only look for buys. So one way we can know, okay, another way how we can know our target is by drawing a second trend line. So I'll just click on this and then come here and clone. I'll clone this. So now I have a second trend line, as you can see. So this is my second trend line. So I'm going to just, modify it very well. You can see, yes. So this is my trend line. So now what you have is called a channel. So even as guys, I've posted very many strategies, but again, these strategies are not like Rambo. They are very hard to use. They're just based off price action. So as I told you, when price comes down here, you can even see. Let's just starting from here. But again, most times we didn't know price would go up here. But again, you can see price comes here, bounces off, come here. So we buy. We buy, you keep on buying until when price comes back next year. You see? But again, when you want to know, okay, when the retracement ends, the retracement ends on this line. You see? Then price goes up here. You see? It goes up here to form another higher high. So you're buying. But again, guys, if you want to sell, you can sell. But again, when you sell, you just have to be careful. So me, the reason why I don't sell, because when price is coming back down to this line, it doesn't, like, it forms this noise. You see this noise? You see noise. This is too much noise compared to how price goes up like this. You see, when price goes up here, like, it doesn't make so much noise. It doesn't make so much noise. You understand, guys? So this is our uptrend market. You can see it forms higher highs, higher lows, higher highs, higher lows. So guys, my previous, now this is how I know price is going to reverse and go to the downside. So this is my previous high low. So if price breaks out here, you see, guys, price broke out here. You can see price broke out here and retested. You see, it broke out and retested. So this is also my high low. This one is, we can have major high lows and mini high lows, as you can see. You see here, when price broke out, the big candle closed below. Let me show you guys. I hope you're with me. Let me make this long like this. Yes, you can see. Do you see this big candle, guys? Do you see this big candle? It closed below my previous high low. This is a high low, high low, high low. So this price closed below. Then what I wanted is now to get a retrace. I wanted price to retest this level. So when price retests, it's trying to see if it can come back here, but it fails. That's why now price reverses and comes down. You can even say Doji. I told you Doji represents. I told you guys the Doji represents a reversal. But now you can even see now price started. See, higher high, lower low, lower high. You see now? Now things have changed. Things have changed. You see again, lower low, lower high. Guys, you can see now. You see where we're headed to. Lower low, lower high, lower low, lower high. You can see. Guys, forex is very interesting. If you just know these things by your fingertips. If you know these things by your fingertips. But I hope you all have understood how we buy on the uptrend markets. The other way we can buy is by using the Fibonacci retracement. The Fibonacci retracement helps us to know when a retracement will end. You see, it helps us know when a retracement will end. So I'm going to show you how we use the Fibonacci on the downtrend market, but this is an uptrend market. So guys, let's jump onto the downtrend market. So this is our downtrend market. The downtrend market, I'm going to choose Euro USD because I've taken trade in the Euro USD. So this is the Euro USD. There's too much noise here. I mean, there is too much Yeah, there's too much analysis here, but let me first remove all of it. Let me first go to my daily time frame so that you can see. So I hope you see this. I hope you see this. So this is our downtrend market. Let me first remove all this. But again, before I remove anything, guys, as I told you, when you are coming in a downtrend, price is now forming lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. And then what do we look for? What do we look for on a downtrend? We are only looking for sells. We are looking for sells. But again, depending on what time frame you're on, me, I'm talking about big time frames only. But again, if you're on a small time frame, you can. I don't like really recommend people trading on small time frame unless you're someone who trades, smart money concepts and all that. But if you're a trader who wants to, like drive big moves from the upper part to the uh, lower part, you have to trade on big time frame. So you can see. So when the price, remember I told you we have impulsive moves and corrective moves. So on the first chart I showed you, we didn't have like really corrective moves that are like very big. Now you can see here. You see this? This is a corrective move. Since this is an impulse, you see, impulse, then correction. This is a correction. In this way, price forms a correction. You see this correction? A correction happens when prices are again going to drop to the downside. Again, you see price drops. Again, you see correction, correction. So let me remove all this, then I explain to you how do we sell on such a market. Let me remove all these patterns. But I told you guys patterns form everywhere. Patterns form everywhere. Let me remove all this noise. This is too much. Oh my goodness. Okay, so I'm removing all this so that you can see. I've been trading on the Euro USD since 2000. This downtrend since Feb. I've been eating like in between like this. So we are here, guys, as you can see. The first way is just identifying how price goes down. I told you when price is coming down, it forms lower lows, lower highs. It forms lower lows, lower highs, lower lows, and lower highs. So you can see we had the zone here. So I'm going to mark out this zone. This is a strong zone here. This one here. You can see this one here. This was our zone here. This line. You see where I put my line? So now price, you see price had failed to break here. The reason why it had failed to break there, because this was a major zone. So if I zoom into my history here, you can see even price was once here, price was once this side, you see? So meaning price was having hard time to break there here. Oh, that's why price just bounced off here. But again, price comes up here. Then, so this time around now, when price goes down, you see, it gives us this impulsive move to the downside. That's why I told you we are selling. So when price comes down like here, you see, then it's going to correct. You see, there's a correction. So if you use your Fibonacci tool from here, so guys, I told you I'm going to teach you the Fibonacci tool on this downtrend because this is where I had like these nice moves. So when you're using a Fibonacci tool, so guys, listen to me very well. A Fibonacci tool is, first of all, Fibonacci was invented by some guy called the Fibonacci in the late years there. So this guy, the Fibonacci, these are just sequence of numbers. So a Fibonacci, we use it to know when a retracement will end. So what is a retracement? So whenever you have an impulsive move to the downside, so let's say our desired move, price has to come down. So meaning that our overall trend is a downtrend. So meaning price only comes up to correct, then after it keeps on going down. So one of the best things to use, we use a Fibonacci tool. So a Fibonacci tool is also part of technical analysis. We come here, you see on your left hand side, you choose that, and then you choose Fibonacci. So I've selected Fibonacci like this, you see. So when I'm applying Fibonacci on a downtrend, I apply it on the swing high. On the swing high, you see this is my swing high, you can see? Swing high to swing low like this. You see? Swing low. That's right. I have to apply it here and here. Let me show you. I'm going to apply it up here and down here. Then you can know how far price will retrace up here, then come down. Me, I can already know that price when it goes down like this with this big impulsive move, it's going to definitely retrace on a previous strong zone. So this is a zone where price had broken. That's why when price comes down, it comes back here to retrace. Then after again it goes down. So when I choose my Fibonacci like this, I'll just put my Fibonacci here and then put it here. So how you can see, guys, I put my Fibonacci here and down here, then drag it to future. This, guys, we call this dragging it to future, so that you can see how far will price go up before it starting to come back down. If you have, if wait a minute, target, yeah, no problem. Again, I'm going to sorry. So a Fibonacci, remember I told you it helps us know when price will reverse. So the best, guys, listen to me. The best way to know how prices, how far price is going to retrace and then go back down is by just knowing that whenever we have a big move, so this move from up here to down here, this is 100%. So this Fibonacci represents sequence of numbers that I told you. So this is from 0 to 100. So now this Fibonacci, it measures how far price is going to retrace and then keep on going down. So the most important levels is to look for is the 50 level. This, you see this one, this one that you see 0.5, that is the 50 level. Then this is 0.61, this is the 60 level, then the 38.2 level. So price only retraces mostly 38.2 or 50 or 61. So this is why you always wait for your price to reach and then reverse down. Guys, note this in your notebooks. The most important levels 0.382, then 0.1, then these are the most important levels, guys. I want you to note this down. 61 at 0. These are the most important levels, guys. These levels, you see, this is why you always expect price to come down and then keep on going down. You see, so when price, you see, we see these guys, look where price reached. Price reached at 0.50. Oh, just call this 50 level. So meaning price came down and then retraced 50% of this long impulsive move. That's why now when price reached here, now this is where we apply in our candlesticks. Look at the candle we have. This is a bearish engulfing candle, and then now we drive this down. So if I take my trade here, because since now I had to wait for now the candles. If I'm also trading with the candles, I take my trade down here and then put my stop loss just above here, and then I drive this until price comes on to my next my next trend line. Because remember, this is a channel. So me when I'm trading, I do what we call a confluence trading. I apply all these so that they can help me determine my targets. But when I use my Fibonacci here, I take my trade just here and then put my stop loss above and then wait until price comes back down here. Do you understand me, guys? This is how I measure my target. Until price comes to my next trend line here, then I'll come out of the market. So as I told you, we are only looking for sells on a downtrend. We are only looking for sells on a downtrend. So that is trade number one. So let's continue. And guys, note this, on a Fibonacci retracement, these are the points that we consider. That's where price will come next to. So now let's say, now you see, now price, you see, price, now price has come down here. So now meaning price has found another resistance. So meaning this is resistance. Now this was, no, excuse me. So price has now come down here, it has found another support now. So this support, since price broke here, this guys here, since price broke here, now this becomes a resistance level, this line here. So price comes down here, you see, then again you see when it comes back up here, it tries to come back almost, remember, it almost wants to come back to a level where it has been. You see, even see price was already here, you see price was here, price was just here, you see. So this is my resistance level, then also price was here. That's why when price comes back down here, the retracement now, it comes back here, up here, you see, it comes back here, you see, to try and then go back down. So if I'm again to use my Fibonacci retracement, guys, you're going to see the same thing. If I use my Fibonacci retracement from up here to down here, you're going to see that, okay, this is just where price, you know. So we only look for sells again. We sell here, but price comes back here. You can decide to buy, but again, when you're buying, it's quite a risky, guys. The reason why it's risky because there's too much noise when prices retracing or when prices correcting. There is too much noise. There is too much noise. So meaning I would wait for price to retrace again. Where do I expect price to retrace? When price, I just expect price to retrace on the previous level where price has been already. You can see price has already been here. So since price has broken here, I'm going to mark this also. I mean, since price has found support here, I'm going to mark this as my new support. You can see this is my new support, as you can see. So when price comes up here, again, guys, I use my Fibonacci tool. I place my Fibonacci tool from the highest swing high to the swing low, then drag to future. So this is how I apply it, just like this, like this. Guys, do you see? Are you with me, guys? Are you with me? So do you see where price reached? Guys, do you see where, if you have to look onto the computer with your eye, you zoom in and see price again reached 0.5 level. Remember we said 0.5 level is the same as 50 level. So meaning this is 100% move. So meaning price retraced just 50% of the previous level. No, guys, you can use a Fibonacci on an uptrend or on a downtrend. You can use it on any market. As long as the reason why I didn't use it on the first uptrend market is because it wasn't like really valid. The moves weren't like really valid. For that one, I would just use the support and resistance levels. Fibonacci is a very good concept. Most of the pro traders use the Fibonacci. Most of the traders use Fibonacci, but again, without even using the Fibonacci, me, I can just trade using support and resistance. So there are 4 or 3 concepts you can use here. We can use the support and resistance levels, and then we can also use Fibonacci concept. Again, we can use channels. So the reason I'm using the Fibonacci right now, because the Fibonacci is very easy to use. All you just have to do is apply it from your swing high to your swing low. You can even see price retrace just 50% of this level. Here it came back here, then it came back down. Even when we are to identify which candles that we had there, you would see the candles. We had a hanging man there. You can see this is a hanging man. You see this one? That's why price came back down and dropped down again for big sell. Guys, the Fibonacci is just a simple concept. Don't try it. If you're confused, I'll be doing another video explaining it more and more. But again, Fibonacci is just a concept to help you know where a retracement will end. So let me actually first zoom in here so that you can see. Let me come here. Let me zoom in very well so that you can see. So for those that don't know about the Fibonacci, look here, guys. I want you to focus here. I want you to focus here. For anyone who doesn't know Fibonacci, this is how we use a Fibonacci. So a Fibonacci, when you're using a Fibonacci retracement on an uptrend, so let's say we have price coming up like this, you see, like this, you see. So meaning this is an impulsive move if price is coming up, you see. Then we can have a retracement. So this is like a retracement here. See from here, like to, let's say here. So when you see something like that on your market, okay, you know, okay, this is a impulsive move retracement. So how do we use a Fibonacci retracement? We apply a Fibonacci retracement from our swing. When you're applying it on an uptrend, we apply it on a swing low to swing high, a swing low to swing high, a swing low to swing high. So what I will do, come here, choose Fibonacci retracement. You can see there are very many technical concepts here, but I'm going to use the Fibonacci retracement like this, and then apply it from my swing low to swing high. My swing high is this one here. Swing high, then drag to the future. So as you can see here, like this. So for those that don't know about the Fibonacci, this is how we use it. So when price goes up like this, it will just want to, remember I told you from here to here, this is 100%. So what I want price to now retrace a small percentage of this market, then go back up. As you can see here, price came to my levels, and I told you the most important levels to look for is 0.5 or the 50 level, 60 level, and 38 level. This is where price reaches and then reverses. So for me, my job is to find entry just down here, then put my stop loss just below a previous level, and then I can put my target either at this first level here, or I will measure between here and up here to measure my target. So price will always form this impulsive move when it breaks out here. So guys, this is how we use a Fibonacci retracement on a downtrend. I hope you have understood. I hope you have understood. Let me also show you how we use the Fibonacci retracement on a downtrend. When you're using a Fibonacci retracement on a downtrend, it has to be the opposite. Since on the downtrend, we're only looking for sells. So let me first tell it this. Guys, if you're new around here, make sure to subscribe to this channel. Like, turn on the notification bell. So on a downtrend, we need to have price coming in a downtrend like this. You see, this is an impulsive move to the downside. Then the retracement has to, go up like this. You see, just up like this. So again, this level, this one from here to here, this is 100%. From here to here, this is 100%. From here to here, this is 100%. So what we want is now to use the Fibonacci retracement from the swing high. We come here, choose the Fibonacci, choose it from the swing high to the swing low. This is the swing low, like this, you see, like this, like this. Then remember, I told you the points we look for in the market. We look for our points. These are the points we look for. We look for 50 level, 60 level, and 38 level. This is where price reverses. So whenever you use the Fibonacci, look for price reversing from these levels. Sometimes you may not know how far price will go. So the levels for you where that you look for is these levels. These green levels. Actually, you see on these green levels, this is where we are going to see price now reversing. If you're using a Fibonacci on an uptrend or a downtrend, price reverses from the same levels, 38 to 50 level or the 60 level. That's where price reverses from. Guys, I hope you have understood the Fibonacci retracement. I hope you have understood the Fibonacci retracement. I hope you have understood it. I hope you have understood the Fibonacci retracement. So let's say if I didn't use the Fibonacci retracement, let's say if I had used my channel. Remember I told you when price is going in a downtrend, what do? We draw our trend line above the price. We draw our trend line above the price. So the reason why I drew my trend line up there is because price is in a downtrend. As you can see, this is a nice downtrend to the downside. Look at this, guys. This is a downtrend. So what I want is price. Whenever price comes up here, I sell. I sell. So for you to be able to use the downtrend, you need to apply a second trend lines to form a channel like this. You see, this is now a channel. I'll just grab this like this and then put it down here. You see, this is now what you have. So here I can know if I take trade here, I'll come out when price switches here. You see, you can sell. See, guys, look, this is a downtrend. I mean, this is a daily time frame. So this from here to here. These are these are months of you holding your trades. Most of you guys ask me, can I hold trades on with small money? Guys, you can hold as long as you have patience. As long as you have patience. So imagine, guys, let me measure for you and you see how many days it takes for market to come from here to down here to down here. Let's see. These are 43 days, guys. 836 pips from here to here. Even though you're using 0.01, you would have made money if you take this trade. This is, guys, and the reason why I focus more on this simple concept is because these simple concepts have a winning rate, they have a high winning rate. You can even just see, guys, look, when I take my trade here, they're not slow. The market doesn't even do stop loss hunting. It doesn't even go back up there to take out my stop loss, and then price keeps on going down. Look, even here, if I take my trade up here, you see, even here, you can see. So, guys, I told you, man, you just have to focus and you let your brains open your brains. Most of you don't want to let your brains to be open to learning. Even I told that someone yesterday. I told them you don't want just to let yourself learn forex. Let yourself learn forex. You get. So again, as I told you, these are lower lows, lower highs. You see, you see, lower low, lower high. So since price breaks this, you see this support level. This is the support level. You see, this is support level right here. You see, support level. Price breaks it. It comes down. It finds another support. It finds another support here. So we mark out this part here. You see, now price goes back up here. It finds resistance. It comes down here. It breaks this support. Again, it comes down here. You see, now here it forms another. You see, it forms another support here. Again, it comes here. It fails to break here. Now it has come. It has broken here. It has broken here. You see this one. What is this called, guys? A resistance. The reason why it's a resistance, it was a support before. Now since price has broken, now it has become a resistance. Now price, where do you think now price is headed to? Where do you think price is headed to? You see price has broken now. It's trying to retrace back there and then go down. This is the Euro USD. Now when you apply some fundamental analysis, I told you we have to analyze both of these things hand in hand. Right now the euro is doing bad. The next months that are coming, it's going to be a bloodbath for the euro. It's going to be a bloodbath for the euro. That's why these structures, even they also show us that price is coming down. Europe right now is doing bad. Do you understand me, guys? So now this is where price is headed to. Let's say if now price comes back to this level here, what do you think? Price will now bounce off and come back maybe somewhere where our this trend line, if we pull it and put it like up here, that's where price will be coming next. So meaning someone who took trade here, they would be in profits up and down here. You see, they would be in profits. Do you understand me, guys? Forex is very simple. Forex is very simple. And then, as I told you, there are even patterns. There's a pattern here. This is a cup pattern. This is a cup pattern. This one, you see. Then here we have a flag. We have a flag. This one. See. So, guys, this is how we trade the downtrend market. We are only looking for sells on a downtrend market. But again, if you want to buy, you can always buy even on a downtrend market. But just make sure your stop loss is very tight. We don't want to be caught up anywhere. We don't want to be caught up anywhere, guys. So let me share my last screen for the ranging market, or what we call the sideways market. So a ranging market is the one where we buy and sell. Is the one where we buy and sell. Is the one that we buy and sell. So let me share that screen, guys. That ranging market is going to be our last market. But then after today, my next live stream, I'm going to be teaching you indicators and how we use indicators effectively. Then the next upcoming we shall be doing the next upcoming live stream, we shall be doing now some strategies and how you can apply strategies. Or most of those things I've been teaching you. Yeah. But again today I've just been teaching you on how we can just basic stuff like how we trade. But again, this is not just basic, since most of people don't apply proper risk management. This is not just basics. So let me share this. Okay. So this is my downtrend market. So I'm done with the downtrend market. So then this was the downtrend market. Then this is the ranging market. So guys, what do you know about the ranging markets? Most of you, I think this is also one of your favorite pairs to trade. Ranging market. So ranging market is a market that is ranging in a fixed zone. It's a market that is ranging in a fixed zone. By the word fixed zone, what do I mean? So this is what I mean by a fixed zone. You see this? Price is ranging in a fixed zone. So you see, price, we know reaches here, finds resistance, it comes here. It comes back here, it fails to break, it finds support here. See? This is called a fixed zone. It's called a fixed zone. So meaning we are buying and selling. When price comes up here, we buy. So this is not just a resistance zone. This is what we call a supply zone. This is where price is failing to break. You see, 1, 2, 3. So when price fails to break here, break there, this becomes a supply zone, and this becomes our demand zone. So again, this is a resistance. You can also call this a resistance level, and then it's a support level. So a resistance level is a level at which, or it's a level where buyers come in, and then a support level, this one, The support level is where, I mean, this is where sellers come in. I'm sorry. So a resistance level is where sellers come into the market, and then this is a support level where buyers come into the market. So we buy and sell. So here we buy here, sell here, buy here, sell here. You see? So I'm even going to show you this on a live market, guys. I'm not just going to show you that you're just buying here and selling here. I've already taken some of these trades. I've already taken some of these trades. So let me share my screen so that you can see it. Guys, don't run away. We are still learning. Don't run away. The way you focus. Shout out to all those guys that have been on this live. I see I've been live for 1 hour and 46 minutes. Wow. For everyone who has been on this live since the beginning, shout out to you. I see you're focused. So let me share my trading view. I'm going to show you a pair that I've taken a trade on. So this is Euro USD. I'm going to search for Euro USD. Euro CAD. So this is where we had a little bit of a ranging market. You can even see I've already marked it out. It's here. You can see. So this is my daily time frame. You can see. So let me go to my 4-hour time frame so that you can see clearly what I'm trying to mean. And then I'm going to make this. I hope this is clear, guys. I hope this is clear. Guys, do you see? Do you see what I'm seeing, or you're not seeing? Tell me. These things happen every single day. Even though they don't happen every day, but as long as you're analyzing markets, these things you never miss out on these things. You will never miss out on these things. So this is what we have. You can see prices in a downtrend. Remember, guys, from a downtrend, always from one market to another market, from a downtrend to an uptrend market, from a downtrend to a ranging market, or from an uptrend to a ranging market. So we had a downtrend. You can see when price reached this zone here, it failed to break here, so it came back. You see, it failed again to break here. So when you see these 2 points, when price rejects like a certain zone like 2 times, like this and this, just draw there a line. You just draw there a line. You see, I draw there this line. So if I delete this box, you see, I draw there this line. You see, I draw that this line so that I know, okay, this is now a supply zone. So when price bounced off here again, it came here, and you see. So me, I want to be buying and selling. So see, price comes here, comes back down here. So this is where I'm looking for my major candles here, here, here. You see. So this now makes a ranging market, as you can see, ranging. So I sell here, I put my stop loss above. You see. I sell here, I buy here. I buy here, I sell here. But sometimes we shall receive this. You see here? Yeah, sometimes these will come into the market just to take out your stop losses. Yeah, you just have to be careful, guys. You see? We buy and sell in this market. We buy and sell in this market. We buy and sell in this market. So you can see, guys. Let me put back this. Removed something. Let me put it back. This small box. Yeah, this one. As you can see, guys, there's nothing confusing on this market. You're buying and selling in this market, but your major thing is to identify. Your major goal is to identify a zone that is very strong. A zone that is very strong. And how do you even identify that this zone is strong? You see this zone here, where price is finding support here. You go into the history. You see, you zoom into the history. Let's zoom into the history and you see, guys. You zoom into the history and see. Let's check this side and see. You have to like go into the history and see, okay, price rejected there. Maybe if I reduce my time frame, I'll be able to see how price rejected this zone here. So I can mark it now. I can mark it out also like that. Or what you just do, guys, when price, it's very hard to, so some of people think it's hard to mark out these zones. But again, when price does this, before, even though you don't have 2 points to connect, just draw here a horizontal line. I think most of you know what a horizontal line is. You just draw there a horizontal line here. So when price comes back and bounces off here, okay, now this is a valid trade. You can even see here we had an engulfing candle. You can even see this is an engulfing candle. This is a bullish engulfing candle, guys. You can see bullish engulfing candle. You see this one, bullish engulfing candle. There's nothing, there's nothing tricky here. You see, bullish engulfing candle here. A small red candle and a big red, blue, the big blue candle. The blue means green and the black one means red. You see, now price goes up. You see? But again, you can even see when price is going up, it's forming highs, high lows, highs, high lows. You can see, guys. So, but again, on a ranging market, when you ever have chance to identify these markets, we are buying and selling. You sell here, you buy here. You sell here, you buy here. But again, we are doing this as we're waiting for price to break out. We are doing this as we're waiting for price to break out. Do you understand me, guys? You can see. So one of the signs you see that price is going, is about to break out. You can even see we had rejection 1, 2. Actually, had from here 1, 2, 3, 4. You see, these are all rejections. Again, now look at when price switches this zone. What does price do? It doesn't come to this zone here. This is a sign that price, okay, now it wants to break out. So when price comes here, it breaks out. You see, it breaks out, it retests. See, it breaks out, it retests. Now it keeps on going down. See, now it goes to a downtrend. I told you, from an uptrend, we receive a downtrend. From a downtrend, we receive an uptrend, guys. So that is called a ranging market, guys. I hope you have understood what a ranging market is. I see most of you are running away, guys. Focus, 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 guys. But again, this is just a ranging market, guys. I hope you have understood it. We are buying and selling at the same time, but the major thing is for you to identify strong zones. You have to identify these strong zones so that you can be able to apply them. Even one of the easiest ways to use is by applying order blocks. So if I come here and click my favorites, I can put your order blocks and then they will show me the strong zones where price was jumping in between. So when I put these order blocks, they will definitely show me. So guys, look here. You see, even order blocks are marking out my zones for me. You can see they're marking out my zones for me. You can see this is an order block. I haven't put this. You see, order block here, order blocks up here. You can see, guys, until when price switches and breaks out, and you see. So guys, for you to learn forex, you have to be in the market at least for some time. You learn forex by experience. That's why even when you go to a job, they will ask, "Do you have experience for this number of years?" Those people, they don't speak to ask if you have experience. They don't want anyone to come into their business and make mistakes. Do you understand me? They don't want anyone just jump into their business and just be making mistakes. That's why they will always ask for experience. So guys, that has been technical analysis. There are more things, guys. Guys, do you want me to continue with let me see. We still have just, I think, a few. Let me see, where is this? The trend line books. The trend line books. Yeah, this is my screen. So, guys, we're left with just a few. Uh-huh. As you can see, when this PDF, I'm going to be sharing it in the Telegram. You can see I'm explaining support and resistance, how you can know, okay, this is a support level, this is a resistance level. You can see the breakout retest. So guys, we have also what we call a trend line. Trend line. But I've already explained how we can trade with the trend line. On a downtrend, we draw, let's say on an uptrend, we draw the trend line below like this, you see. We draw the trend line and then we buy whenever price comes back down to our trend line. You can see here, we buy here, buy here, buy here. But whenever price bounces off our trend line, we buy. You understand me, guys? We buy whenever price bounces off our trend line. You see? So, but again, on a downtrend, we sell whenever price bounces off our trend line. You can see whenever price bounces off here, we what? We sell, we sell, we sell, we sell. Guys, I don't want you to go back in the market and you'll be gambling, guys. I don't want you to gamble with the market. I want you to trade with things that you have studied, things that now you know. Don't be seeing these traders that are posting every time money and then they're confusing you. Now you guys also start, quickening your process. Most of these people are just scammers now. They're scammers. People that only post money and all that bullshit. Those are scammers. Then you can see this is my support and my ranging market. Again, this is we sell, buy, sell, buy, sell, buy. See? Guys, that has been the trend line. But we trade with the trend line when we were just waiting for the trend line break. Guys, I'll teach the top-down analysis. This thing I'm teaching, I'm taking my time, I don't want to rush things. I can't be teaching you everything in just, here. I have to take my time teaching you so that you can understand. Forex, we don't want to compile everything. That's why, guys, I'm not even doing seminars because I can't teach everything in just one seminar. You can't. It's impossible. So I've seen most of you guys going for these seminars where someone calls you and then they're trading live, and but don't go for that bullshit. How do you even trade live? And then how can I trade live and tell you to join me? What I can do, I can go live here on the live stream. I be analyzing charts, and then you can be there watching me. You see, when I'm analyzing charts, so you can be following back what I'm analyzing, but I can't be giving out signals. Like the some traders here in Uganda that are doing these things, where they're doing live sessions and you guys go with live accounts with money on, and then you're trading. What did they give you guys? Don't go for this bullshit. If you want to learn forex, take your time, give your time 3 months, 4 months, go off social media. Learn each bit of forex. Research. I told you the richest people in the world, they research data. I want you to be, even though you're not rich, but let your mindset be of a rich person. Let it be of a billionaire. You understand me, guys? Take your time to learn forex. I'm going to. You see, the first session I did was basics. Now this has been technical analysis. You see, so we're going to do more technical analysis, but this time I'm going to do our forex patterns. I'm going to do forex patterns. So, guys, I hope you're going to stay on. I hope you have liked this video. I hope you have liked this video, guys. If you have been on this video from the start to the end, let me see a comment. Let me see a comment. I give a shout out. Guys, take your time and learn this skill. This is a very, it's actually, forex is the hardest thing, but again, the easiest. It's the hardest thing in a way that we need to. There's what we call taking a risk. Most of the people that come into forex, they're not ready to take risk, but that's why it's a very hard thing. But again, if you're willing to take risk, then you see. So why is it easier for people to go out and spend money? Calvin, shout out to you, man. Guys, why is it very hard for people to why is it hard for people to go out and spend money? Like you can go put 300,000 Uganda shilling, you can go and put $100 on just a shoe without even checking. But it's very hard for you to put money in the forex markets. Like you even start freaking out when you go into a loss. So that's like why forex is very hard. But now when it comes to we people, see me, it's rather I lose the money trading than losing my money going to buy food and that bullshit. You get so guys, I want you to like make forex your priority. Abbas, what's up, my guy? So guys, I want you to be this kind of person that I want you to be this kind of person that is ready to sacrifice anything for forex. Because forex, it will always give you back. Whatever you give it is what you give it back. If you give it energy, forex will give you energy. Like it will give, like it's just like even in a relationship, the same energy you give to your partner, like the same energy like you guys will be. But if you don't give your partner energy, you don't expect anything from them. So guys, give forex time, learn it, put money, trade it. Make sure to always use a stop loss. I've taught you how we can analyze the uptrend market, downtrend market, easy way. There's nothing hard on how we analyze these markets. But the problem when you guys go into these charts, I don't know how, like your pressure, like you start panicking, guys. Avoid the trading on days when you don't know, like when you don't feel like trading, don't trade. You get, guys. Only go and trade when you have seen a chart pattern that maybe what you learned, you have seen it on the markets. Avoid trading on days where the heavy news like NFP, like last week NFP. Most people lost money because they didn't know how volatile NFP is. Understand me, guys? So I want you to take forex very seriously. Research all the bad things about forex, how people lose money. Because remember, 95% of retail traders lose money, and I hope you never want to be a part of like those 95 that lose money every time in the forex market. I want you to be part of the winning squad. You get. So guys, if you want to get funded, check the link in my bio. If you want to, the best broker I'm using is Xness. The broker that has like fast withdrawals and fast deposit is Xness, guys. Go check Xness out and then create an account with them, guys. I thank you all that have been on this live. Stay blessed and yeah, guys. I'm off to the gym now. Yeah, I'll see you in my next video. Make sure to subscribe, everyone. Make sure to like this video. Bye bye.